We've got Bino Pathiparampil, who is joining in from Elara Capital to discuss this and more. Thanks so much for taking time out. So clearly this stellar rally that we've witnessed, what do you think is the cause of it? Do you think it's just a pull back from the underperformance that we witnessed recently? And is it here to stay?
Hi, good morning. So we have seen a great rally in the small and mid caps in the last few months in this calendar year. So we did some analysis to see how the outperformance or the rally pans out over a longer period. So if we look at a 10-year time frame, the small caps and mid caps have outperformed the Nifty by about 600 to 600 basis points in the Nifty mid cap index and 300 plus basis points annualized for the small cap index. But this outperformance comes down significantly if you look at the last 5-year time frame. The Nifty small cap index has actually underperformed Nifty in the last 5 years. And this has happened mainly because in the 2018 to 22 time frame, we have seen a time frame when the small caps and mid caps significantly underperformed the Nifty. This underperformed performance corrected to a great extent in the rally in the current calendar year, but still we believe that there is more upside to this rally. If you look at the small cap and mid cap premiums to Nifty valuation, there is still some more room to reach the tops, the peaks we saw in 2017-18 rally or in the 2007-8 rally. So we believe that for the time being, there is no risk to the rally in the broader markets, and we continue to be positive on the small cap, mid cap space.
Okay. So yes, you continue to remain positive, no doubt, but give us a sense as to, a little bit more perspective on that. What kind of returns can we expect then for the mid and the small cap indices now? What is it that you're expecting for the rest of this year?
Sure. So if I look at the valuations do not give a big room for expansion from here. We are almost close to the peak valuations we have seen in the previous cycles, like I said, in 2017 and 2007. But at the same time, if we look at the lower bottom of the components of these indices, there is still a lot of cheap stocks out there where I see significant potential for re-rating. At the same time, the flows into the mid caps and small caps continue to be very strong, both domestically as well as from the FII side. In that context, I expect a lot of these flows to go into the cheaper stocks within the mid cap, small cap space. And the lower bottom, which is the relatively underperformed stocks within the small cap, mid cap index, are the ones where we think we can see maximum returns. Having said that, at the overall index level, the underperformance of last 5 years versus Nifty for the mid cap and small cap indices will get covered up only if the small cap index rallies by another 20% and the mid cap index rallies by another 10% from the current levels. So roughly those sort of returns can be expected in the next 6 to 12 months from these indices in our view, provided other major economic or geopolitical risks don't play out.
Bino, your report suggests that mid and small cap valuations relative to the Nifty are still below the previous highs. Give us some more perspective, and also by how much from the mean are they really away and how much more upside then can we expect?
Sure. So like I said, the valuations are close to the peak, but at the same time, the valuations premium to the Nifty is still below the previous peak. When I say previous peak, I am referring to the 2017-18 rally in mid cap, small caps, and 2007-8 time frame. We have seen higher valuations during the COVID pandemic, but I'm discarding that because the earnings remained suppressed during that time frame. So on the valuation front per se, at the overall index level, we can't say there is great valuation upside. But given the underperformance over the 5-year time frame, and given that um, the valuation premium over Nifty for these two indices are still below the previous peak, in 2017-18, for example, the small cap, mid cap premium to Nifty was 10 to 20% higher than the current levels. So that gives us that, combined with the very strong inflows into the mid cap, small cap funds, give us room for another 10 to 20% rally in the small mid cap space. Beyond that, of course, I expect earnings growth related upside to continue unless other risks play out to the markets.
For highlighting that. But tell me, is the debt on books of these companies also lower than what it has been in the past, especially when it comes to small and mid caps at an average level?
So the exact numbers I have to work out, but in general, the leverage, the risky leverage among corporates, among the mid and small corporates, is lower than what we have seen earlier. So from that perspective, we have very strong balance sheets almost across the board. A lot of companies have also raised equity funds, which has helped lower the leverage related risk. So we are seeing a scenario where there is good earnings growth, strong balance sheet, as well as a lot of macro tailwinds, which are there for India, a lot of sectors in India.
So just give us a sense as to which pockets you believe one should look at as an investment opportunity, given that we've already seen a very ferocious run-up. You track this closely. Where is there opportunity at the current juncture?
Sure. So, like I said, we believe that the flows will go more into the relatively lower valued stocks within the mid cap and small cap indices, growth on a growth adjusted basis. So, in our report, we have identified the cheapest stocks on a PEG basis, and from among them, we have identified a few list of stocks which potentially look pretty attractive. Those include among the mid caps, Power Finance Corporation, Samvardhana Motherson, NHPC. Among pharma names, Lupin and Aurobindo. Among cement names, Dalmia Bharat and JK Cement, C Enterprises, etc. And on the small cap space, that includes SJV and Bharat Dynamics, PVR Inox, JNK Bank, PNC Infratech, Marksens Pharma, and Gabriel India. So these are some of the names where we see valuations are still not stretched on a growth adjusted basis, and we see significant potential for relating from significant capital inflows into the mid and small cap space.
Thanks so much for taking time out and sharing with us that perspective on the mid and the small cap space. Speaking of, you can see that outperformance in today's trading session as well, pretty evident. That's the frontline index for you, up 0.5% in the mid and the small caps. Well, if you look at today's chart, even the 1 week chart or the 1 month chart, you'll see a smart degree of outperformance.